how to fill out the W-4 for a person who pays into their 401k. This is the video that you needed that you didn't even know you needed because you didn't know it was coming your way. But it's been on my radar to do this video for some time now. So hopefully this hits home for someone so you can see the power of the W-4 and how it can be used in more ways than one for you to keep your cash flow. You see, a lot of people sleep on this form not knowing that the W-4 form is actually a wealth form when you use it properly. And you definitely want to take advantage of looking at our W-4 to wealth video as well as our W-4 millionaire video on how just this simple form and adjusting it and using the strategy that we suggest you use can build you some long-term wealth. So it's more than just a form just to get a little extra money if you understand how to use it. What up? You got Mr. Smith, 0.5 of Mr. and Mrs. Smith, and in this brief video I'm going to talk about how the W-4 is supposed to be filled out if you have a 401k. So how I'm going to do, I'm going to fill it out in its entirety so you can see the end result, and I'm going to go back and show you what the adjustment with the 401k does. So stick around all the way to the end so you can understand how it works, the benefits of it, and the power in paying into your 401k in more ways than one. We know the benefit of paying into 401k in general. Then if the company matches, we understand the power in that. However, did you know that it can help you as it relates to your W-4? That being said, let's go ahead and dive in. So I'm at the IRS Estimator right now, the tax withholding estimator. Make sure you got your W-2s in front of you, or basically your check stub. You want to have your most recent check stub because it's going to ask you questions that are on your most recent check stub. It tells you to put in some other things as well, but your most recent check stub should be sufficient enough. So I just scroll down here, and you can copy this link verbatim. You can go to irs.gov and click around and get here, or you can copy that link verbatim. So get a screenshot, whatever you got to do to get to the tax withholding. So I'm going to go ahead and use the tax withholding estimator. Click inside about you. In this example, we're going to do it for a person who is single. This person is single with no kids. May another taxpayer claim you as a dependent on their tax return? And right there, we're going to put no. Dependents, we said they're single, so they don't have any dependents. Do you or will you hold a job this year with a paycheck from which federal income tax is regularly withheld? Yes. How many jobs do you expect to hold this year? 1. Pension? No. Will you receive a pension? No. You're not of the age of receiving a pension, so the answer is no. On this one, other sources of income, basically they just want to know if you're making any other forms of income so they can tax it. But on this, we're going to leave all of those blank as well as these demographics here and just click next. Then it gets into the income and withholding. Enter your income and withholding for each job and or pension you will earn income from this year. So basically that's that, and it just tells you some other details. And at any time if something isn't clear, there's usually a question mark at the end of each question that elaborates on that thing that you may be unfamiliar with. So that being said, once that opportunity presents itself, I'll show you just like now. So right here where it says how frequently are you paid, if you hit that question mark, it elaborates on pay frequency so you can understand what it means. But that is pretty much applicable to every area you see the question mark. If it's something you don't thoroughly understand or we don't touch on it for whatever reason, for time purposes, then you can always click on it as you go through it yourself. So how frequently are you paid? For this person, I typically do one thing. For this person, I'm going to say this person is paid weekly. So I'll keep it at that. On what date did your most recent pay period end? So today's date is the 10th. Now you get paid on Friday. So we're going to say that the most recent pay period ended on the 5th. And I'm just, rolling through, so this is not a verbatim scenario. I just want to paint a picture. Enter the total wages you expect to receive this year. So we're going to do $32,000. We're just going to select $32,000 for this individual. Enter any bonuses that you expect to receive. We'll leave those bonuses blank. Use your last pay statement. Enter the federal income tax withheld. So on this person, we're going to say the federal income tax withheld is, we're going to pick this low number that's already here, and that's $84.75. So let me see. Do I want to choose that because we're doing weekly? So weekly $84.75 would be about $320 and some change per month which is pretty accurate. But what I'm going to do is I'm going to offset it because typically it may not be that for a person who earns about $32,000. So in this case, I'm going to just do $60. $60. So weekly, a person who's getting paid $32,000, if they're getting taxed $60 in federal income tax, that equates to $240 a month. That's probably more so going to be accurate for a person who's single with no kids. But like I said, I'm just kind of winging it and just using my own formulas in my head. So 60 is the number that we're doing. Well, per pay period. Apologies. Per pay period 60. Year to date, if they've been doing that year to date, so that'll be 240, 480, and then with 1 week in for another 60, it'll be 540. So we're going to put 540 year to date. 540 year to date, if my math serves me correctly, and I know one of those weeks may have had 5 weeks, so that number may be slightly off, but we'll roll with it. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? We're going to get back to this because I want you to see the difference in the without the 401k and with the 401k. So for now, we're going to click no. Did you or will you contribute to a HSA, FSA? For now, we're going to click no on that one as well. Do you want to go to the next step without including adjustments, or would you like to see possible adjustment? I always click see possible adjustment just so you can see if it's something else that fits your scenario. So if any of these apply, then hit that question mark and, you know, get some more clarification. In this case, neither of these are going to apply to this individual, so we'll just hit go to the next step. You qualify for a standard deduction of $12,550. Basically, you can either do itemized deduction or standard deduction, but if you itemize, just make sure that that number is higher than the standard deduction. So in this case, we're just going to roll with the standard deduction, but if you need clarity on it, you can always click it and expand it. I just don't want the video to be too long, so we're going to proceed. That being said, tax credits. And we're going to skip through these tax credits as well, but basically the same rules apply. You can click on it to see the tax credits, and, you know, if it fits, great. If not, no big deal, but you can always expand just to see what other options are out there for you. So we're going to click to get the results. And in this scenario, let's see what these results are. Estimated overpayment is $982. So what that means is a person will likely get a refund of $982. So this is a single person, no kids, making $32,000 a year, paying in about $60 per week. They'll get a refund of about a little under $1,000 if they don't change anything. And then what y'all also have to understand is that it says are you happy with your results, then you don't have to do anything. However, if you want to adjust your results, you can always use this slider. Basically what this will do is if a person says, you know what, I don't want to pay anything in taxes, well, they won't allow them to not pay anything in taxes because they've already paid in $540. So let's say they wanted to move it to only paying in that $500. So the remainder of the year, they'll be getting $11 less taken out of their taxes, which equates to $44 a month that will go back into their household. We've seen people get over $1,000 extra back into their household per month. But in this scenario, this is what it's looking like. So with that being said, that's just an example. You can always slide it in and determine if you want to get a smaller refund, but you want to get more money throughout the year, or if you want to keep the larger refund and don't change anything or anywhere in between. So that's totally up to you. And then you can always print out an example of it. All you have to do is you come down here, how to adjust your withholding. It lets you know how to adjust it. Then you can click that form and get it printed out. And a lot of times it's pre-filled when you print it out. And you want to save all of these items right here for your records as well. But we're going to go back. We're going to go back like I stated. So I want to talk about the different things that you may qualify for. And in this case, we're referring to the 401k. Now, I have to remember where the 401k was. I believe it is right here. Let's see. Scroll down. Yep. All right. So did you or will you contribute to a tax-deferred retirement plan? Now, remember, initially they was getting a $982 refund. That was their overpayment. So on this, we're going to say, yes, we will contribute to the 401k. How much do you anticipate contributing each year. So let's say that this person contributes $100 a month. So that's roughly 12, or that's evenly $1,200 for the year. $1,200 for the year that they contribute to their 401k. Then we want to hit next. We want to go to next step. We're not going to click anything else. That's the only thing we changed. Take the standard deduction, get my results without tax credit. The only thing we changed. And you see what happened? Their refund went up a couple of 100 points. Why is that? And why is that important? Well, when you're paying into your 401k, it's what's known as tax deferred, meaning you get incentivized for paying into your 401k, for contributing to your 401k. That can increase your refund, or that can give you a little more cushion to where if you did adjust it, now you're getting a fatter amount back into your household. And a lot of people don't know that, because that could be $200 to $800 coming back into your household. That's the average. It varies for individuals, but $200 to $800 coming back into your household is the standard average. However, a person who pays into that 401k, that number can jump even more, and now they're bringing in an extra $300 to $1,100 per month, just as an example, and now they're able to hit their goals a lot faster. I'm gonna go back to the 401k and say we contribute a little bit more, just so you can kind of see the power in contributing to your your 401k just a little bit more. So instead of $1,200, which is $100 a month, let's say they contributed $200 a month because they really wanted the employer to match. They watched this video and they understood how it can fatten up their refund or give them the ability to bring in more take-home pay if they so choose. Let's see what happens from there. So $1,270 is pretty where they're maxing out at. That's what it's looking like, because sometimes you can reach a threshold when you're single, no kids, not a lot of cushion. But it's still just important to know that by having your 401k incorporated in this W-4 form, is more cash flow on the table in the form of a refund or in the form of extra money coming into your paycheck. But more importantly, you're putting money towards your future. So you're taking care of the present with the work you're doing, the income you're bringing in, but you're paying into your 401k, which helps you in the future. And this right here, this increase in the refund, many people may benefit from as well. So a lot of times you used to hear people say that they pay in a little extra to the IRS because they don't want to owe. Another way to go about doing it is contributing to your future in the form of a 401k. Not paying to the IRS, because it can have a similar scenario that allows you to get tax deferred and increase your refund. So hopefully this was helpful to someone. Share this with somebody else who you know who contributes to their 401k who did not know this information, or share it with somebody else who you feel may benefit. Share it inside your favorite group that you feel is interested in this type of education, so we can start raising awareness on strategies that people can use in order to increase their cash flow. And if you want access to the strategy that we highly recommend, click the available link below, and it's just pretty much talking about how you can elevate your lifestyle, your cash flow, and your credit. If you click that, it's a thorough piece of information that talks about more than the W-4, more than just cash flow, more than just credit, just overall elevation of your lifestyle. But it just so happens to include education like this as well if you decide to proceed. So that's all I got for this video. Hopefully you found this helpful. Until I see you again on the next video, Mr. Smith signing out. Salute.